Good afternoon. This is Philip Reeves from 1863 Ventures. The point of this video is to walk you through the cash projection worksheet that we developed and give you a sense of how it works. And so to begin, I want to recap sort of what the goal and purpose of this worksheet is. As a business owner, the most important thing you can be aware of is your cash position, not only where you are today, but where you're going to be in the future. And so the exercise I want to take you through is how to understand your cash position going forward. Importantly, one thing I do want to talk before we mention is this worksheet is for cash only. And so what that means is if you're not recognizing cash in your bank accounts, then it does not go on the worksheet. Okay, so let's do a quick walkthrough. Before we begin, one thing to note, numbers that are in blue mean that you should change them. They are inputs. They're for you to manipulate and change as needed. And so all these numbers are blue. You'll see them here. And then numbers that are in black, those are formulas, so don't change those. Again, you'll see most of those sort of in the sum columns and places like that. Over here on the left, we've tried to input line items for a typical income statement and balance sheet. But for your business, it may be a little bit different. So feel free to change some of these. So particularly where we placed other, that's where you can change it. For items that require an explanation, we use letters. So A, B, and C, we use them down here, kind of allocate, they show what those numbers mean. So let's walk through it. First, today is actually, we're in May, so I'm going to change this quickly just so you can see here. May, I think the 11th is a Monday. Perfect. So what we're looking at here is a sheet that will project the next several weeks of the business. And so what we're trying to do is, first we start off with how much cash is in your balance sheet at the beginning of the week. So whenever you open this sheet up, whatever date you put in, how much cash is in your bank accounts today. Then what you want to discuss, or I guess input rather, is how much cash is your business going to create this week. So in this case, we're saying 2,000 in cash sales and then 500 in credit sales. So again, credit sales are credit sales collected are where we're collecting an invoice. So let's say we had an invoice outstanding for $500 and we think we're going to collect that $500 on this week. We note it here. Financing income, this is where we can describe things like if someone's going to make an investment this week, then we'll put the cash. If we're going to get a bank loan this week, it would go here. So for instance, if you were looking at PPP, this is where you would put the amount of your PPP. The sale from assets. So if you're a business and you think to yourself, hey, I need to generate cash. I have 10 laptops for some odd reason, and I'm going to sell those 10 laptops and I'm going to use that cash in my business. That's where that would go. In this case, we're not going to assume any of that just because, why not? These numbers aren't meant to be sort of exact, so we're just going to show them representationally. Personnel, we're saying for this week is $100. Rent is $100 for this week, but I guess more thoughtfully, it could be higher or lower. Technology, again, this is where you count things like your G Suite, any SaaS products you have, where are they going to fall? Marketing, same thing, conferences, and then others. So I want to spend a second on this section because I think it's important. Because we've talked about exactly what week we're describing in the model here, some of these things we know and we can go ahead and put in place. So for instance, rent. We know that if we're paying rent on the May 11th, we're probably going to pay rent again the week of June 15th. Now, if you're doing this, what might happen is, rent is typically collected on the 1st, so this probably would have been a better place to do it. But just to show you how it would work in a typical scenario, then that's where we place it. Personnel, we know in advance if we have payroll, what week's payroll will do. So in this case, we're saying, oh, $100 is due this week. We pay folks every 2 weeks. So here's 100, here's 100, here's 100, and so on. I won't go all the way to keep this video short. Technology, again, hey, our G Suite accounts hit at the 1st of every month, or in this case on the 11th of every month. So then we know we won't have to do it again until this month. Travel. We're writing this during coronavirus, so I highly doubt we can go ahead and eliminate this line actually. Conference related, similar. So, but the idea here though is overall, as you're inputting line items, because we know the exact weeks that we're talking about, go ahead and put in what expenses you know you have in those weeks, if that makes sense. Okay, financing. So financing expenses are where we're trying to calculate how much are we paying for credit card bills, bank loans, whatever it is. And so here, again, if you actually have a financing commitment, like let's say you have a PPP loan or something like that, then you know the interest payments that you have and you know the principal payments. So you can go ahead and put those in if you have them. In this case, we're going to assume that we don't. And then we get down to the total cash inflow or outflow. So let's walk through sort of what we just did. We're saying at the beginning of the week, we have $1,000. We get $2,500 in sales this week, and then we're going to spend $500 of real cash this week. So at the end of the week, we're going to have $2,000, or sort of an income. We add that to the $1,000 from up top, and our total cash at the end of the week is going to be $3,000. Great. This section below is where we're trying to monitor our credit cards. And so we'll talk about that in a second. And same thing with credit sales tracking. So what I'll describe quickly for some businesses, we wanted to build this in here. So let's say in this case, we're a business, we have an accounts receivable of $1,000, meaning that maybe we sent an invoice out, or we have a contract out, and a client, a vendor, a customer, someone owes us $1,000, but they have not paid it to us. Okay, great. We had the $1,000 outstanding at the beginning of the week. That is sort of the accounts receivable, to use the proper balance sheet term. New credit sales is where we're saying, hey, you know, we're going to also bill someone $1,000 that week. Great. So we billed someone $1,000 this week, and they owe us $1,000, but we did not collect it. And that's the important thing. Because we did not collect it, we have to track it here. What we're saying here is that we had $1,000 of invoices that were due to us, and then we issued another $1,000. We now have $2,000 of invoices that are due to us. But to offset that this week, you know, maybe someone else, maybe the person who owed us $1,000, we called them up and said, hey, why don't you pay me a little bit early? And this person said, I can pay you half. So the person that owed us $1,000 gave us $500. At the end of the week, in total, we're going to have $1,500 of, I guess, receivables outstanding. And again, why this is important is because every business does not function on a cash basis. The top of this balance sheet, the bulk of this balance sheet, we're trying to keep track of how much cash we have. But it's still important to keep track of the amount of invoices, non-cash related sales that we're making. And so this is how we want to do it. So again, this is for references. Let's say next week we anticipate that we're going to write another contract for $2,000. Great. Then you see our AR goes up and down accordingly. Just for reference, the way you pay down AR is back up top. Remember, credit sales collected. This is where we're collecting cash payments. So let's say this $2,000 payment we think is really going to be due in 4 weeks. So it would be due this week. Credit sales collected this week, we can go ahead and project are going to be $2,000. Awesome. And now you see we're back down to the $1,500 that we had before. So I hope that makes sense. Let's see, what should we cover next? As you're using the sheet, the whole goal is really to think about what is your cash position going to be in the future. And so some expenses or some expenses we know, so we put in like personnel, rent, SaaS products, etc. Some collections we know when an invoice is due. So we can, if we feel good about the client, we can go ahead and put it in there. The important thing that we need to project is our cash sales. How much in sales are we going to generate this week? This is very, very important, but is very specific for each business. And so I don't have time in this video to kind of walk through how to do cash projections, but I think hopefully you as a business owner have gotten a sense of what you can do to raise and lower your cash and give you a sense of what your outlook may look like. So for instance, you may know that, hey, whenever we send an email blast, we get $1,000 in sales. I'm making that up. Or whenever we make a whole bunch of outbound phone calls, we get sales. So again, find a way to project your cash. But I think what's important here is you don't need to project, 10 weeks. The goal of this is really to project maybe 1 or 2 weeks. So like it's very, very up close. Hey, next week, like you should intuitively know how much in sales you think you're going to generate next week. And then going one more week out isn't that much of a stretch. But going much further than that could be more difficult. And so, again, that's not the purpose of the exercise. But let's assume that we're sitting here the week of the 11th. We think we're going to make $1,000 in sales, and we're going to make $500. We're going to call invoices and make another $500. Still not going to do any investments, no loans. We don't have any expenses that week. So we're going to make $1,500. Our cash, remember, we started with $3,000 and now we have $4,500. So as you can see, we feel pretty good about our cash position. So I think what we've walked through is sort of a good case. Let's talk through what a down case may look like. So I'm going to clear this out. Don't need these sales. I'll keep these. So let's say, same thing. In May, we do project $2,000 of sales, but then, we don't have good visibility in sales for the week of the 18th. So, and in fact, we have solid visibility that we are not going to make sales on the 15th. But it turns out that there is this online conference that we really need to go to for some reason, but it's going to cost us $1,000. As you can see, we lost $1,000. We will lose $1,000 next week. We'll take our cash balance down to $2,000, which could be fine. I mean, we know we have $2,000 of runway. What I want to explore for a second, and this is just playing around with the model. Let's assume that we started this week with no money and we weren't able to make these sales. So if you're in a down scenario, it may be something like this. Hey, we don't have any cash in our balance sheet. We were only able to collect $500 of receivables. We paid that out. So we don't have any cash. And then next week we have this $1,000 that we need to spend. What are we going to do? For this situation, this is where we put in this credit card balance. So some businesses have a credit card, some have an actual line of credit. The goal of this exercise is to find out, are you going to, I guess, break your line of credit or go above your credit limit? So in this case, we set our credit limit at $1,000. And as you can see, because we need the $1,000 that we aren't going to make in week 2, we're going to use our credit card to make that. Then, hey, we actually are going to default on it. We're fine for week 2, but then you see in week 3, there's another $100 of losses. We can't cover that. Are we going to default? Bright red letters. Yes, we're going to default. Now, this is sort of why building a cash position is good, because in this case, here we are again in May 11th, and we see, because we've done the projections, we're going to have a problem on May 25th. So what we might do is say, oh, well, I'm going to call the credit card company next week and get a line of credit extension to $1,500, and now I'm not going to default. Those are the kind of decisions we want people to be able to make as they're going through things. So like even, for instance, a simpler example, this didn't have to be a conference related. It could have been, let's say you're direct, hair care company, direct to consumer, whatever it is. To make this really real, this could have been $1,000 to purchase inventory. And like, okay, because we paid $1,000 to purchase inventory, we think we can make $2,000 of sales. You see what I mean? Like we're trying to get a sense of where the business is going to be in real cash basis. So again, I hope that helps. One thing I want to remind you before we leave is, remember, we're filling in one column for where we are this week. And then every week, we're going to project 2 more columns forward at minimum. Importantly, every week, it's important to go back and update the cash balance with what your actual cash balance is. So like, let's say, for instance, when we get to the May 25th, the cash balance on May 25th, we need to actually look at our bank account and put in the actual amount of money in the bank of May 25th. And that's important because we want to ensure that we're always using the right balance. So again, I hope that helps. I know this was a quick walkthrough. If you have any questions, reach out to us at 1863 Ventures, and we'll be sure to get you squared away. Thanks so much.